Hello, hello, everybody. It's Aundrea at CMG Home Loans. So today we're going to go over home readiness and what it takes to be ready to purchase a home in this environment. It's 2024 and the landscape has changed. I know everyone is waiting for interest rates to come down, but please, 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 you know what? Don't hold your breath because I have some figures that we did yesterday for somebody that if they buy today, they would have saved a couple $100 a month rather than waiting. Because if you wait, the prediction is the pent-up demand will cause many home buyers to come out of the market, multiple offers, and I don't think you want to overbid on a home and waive all of your contingencies and inspections because that's what happened the last time when the crazy happened. So let's get into it. Getting ready to buy your first home, okay? Whether you've bought a home recently or it's been a while, there are some staples that you have to be mindful of when buying your first home and parameters and guidelines that everybody has to follow. So here's some of the things we're going to talk about. We're going to talk about renting versus buying, the cost of the home ownership, tips for first-time home buyers, how your credit score really affects you. Choosing the right loan program, that's a big one because the wrong loan program and the wrong strategy could cost you thousands of dollars. The application process and what documents you need, because a lot of times people start this process and don't know where to go from there. We'll go through all of that. So if it's worth it to buy a home, some people are destined to be renters, and that's okay. But home ownership, I believe, is a way for you to have safety, security, build wealth. More homeowners are wealthier than the renters in our society. And if you can see from this graph, it shows that with appreciation, which is how much that property is going to increase naturally with the course of the market, year over year over year. Here statistically in Vegas right now on average, it's about 6%. Now, rewind a couple of years ago, some homes appreciated 40%, including my own. So that's some serious profit that I made on my property now that I'm not doing anything with it and it's going to continue to grow and build. But that's money I wouldn't have made if I was a renter. And, one of the concerns with the other part of this graph is about inflation and rates. So something to keep in mind, when inflation starts to come down, so will interest rates. So as you're listening to the news or you're seeing things, when you see inflation coming down, mortgage rates will follow. That might be your trigger. So if you're wondering, how do I get approved? How much money do I need? Is my credit score good enough? What can I afford? Are there incentives for first-time home buyers? Can I afford the payment? We'll go over all of that together. And if you don't know me, my name's Aundrea Beach-Greco. I've been a mortgage lender since 1997 here in Las Vegas, and I really love what I do. And it's not about the home loans we do, it's the families we serve and the lives we impact. And I'm telling you, I have impacted hundreds of lives, and it feels so good to help people become homeowners and to save money and strategically do the right thing to protect their wealth. So, about CMG, the company I'm at is a national lender. We lend in all 50 states, and we're a direct lender. We're one of the largest independent retail mortgage lenders in the US. We offer a variety of loan programs. It covers the gamut of anything that you might need and then some. So we got you covered there. So let's talk about some of your questions, right? Why would you rent? Some people want to rent, and that's okay. It makes sense if you're planning to get relocated more often and more often with your job. Depends. It usually costs a little less than buying a home and the payment. You don't have any responsibilities for the maintenance, right? Your landlord, something breaks, you call the landlord or the property manager and they take care of it all. And you don't have to do any repairs. So those are some advantages. Now, some disadvantages, you don't get a tax write-off. You're not getting any investment in or from the property, so you're not making any equity. You're not accumulating any equity in the property. And what if your rent increased? Like over COVID, landlords were increasing the rents over and over and over and made it super unaffordable to now where you might be paying just as much as if you bought a home. And if you rent, you could get evicted if you're naughty, right? Or if you get pets or something. So why buy? Now, again, I'm a proponent of buying because that's what I've been doing for the last 26 years of my career. And of course, buying a home, there is tax benefits, there's stability. It's an investment in you and your future and your legacy and your family. You could use it to stepstone into more homes, a better home, a bigger home. And of course, there's always that pride of ownership. But some disadvantages, because it's not all puppies and rainbows. Things break, property taxes increase. You're responsible for all the maintenance and repairs. And it might cost more than renting. Some of your cash is tied up. You need to have a rainy day fund in case something breaks. And if you have to sell, depending upon the market, you might not be able to sell as quick as you really need to. And you're not mobile like renting. Renting, you give 30-day notice, you're gone. And in some cases, like back in the crash, your equity might be able to drop, which, that's not the case now, but that's what happened in the past. So now how does your credit affect you? Well, that's kind of one of the top priorities when you're shopping for a home loan. We're going to look at your credit report because it's a snapshot of how you've managed your finances and your ability to repay the debt. So ideally, we want you to have 3 credit lines and you have major payments on time for a year. Now, your credit score is going to be indicative of how well you've managed all of that, right? And keep in mind, there are loan programs for low credit borrowers and less than perfect credit, but you're going to pay more, right? Just like anything else. If you have a credit card or a car and you've had bad credit, you know that those payments and that interest is higher. Usually a lender's looking for like a 620 kind of credit score for most programs. Some go lower. And then if you're trying to get down payment assistance, those FICO scores are higher. So it's case by case. When you're in an application and searching for that, we'll go over all of your numbers. And keep in mind, I appreciate you looking at your credit on Credit Karma, but that is not a FICO score. That's usually not the same number as a FICO score when we pull your credit report. So again, credit score is based upon timely payments, how much you owe, how recently your accounts were open, the number of inquiries, and the type of credit, whether it's a car or credit card. And of course, as a mortgage lender, we're going to look at all 3 credit bureaus, TransUnion, Equifax, and Experian. Now, if you want to perform your own credit check before that you apply for a mortgage loan, you can go to annualcreditreport.com, get a copy. You can get a free report every year. Doesn't give you a credit score, but you can at least see what's going on. You'll see where you stand. At least you'll have an idea of what's going on. Now, if you're not in the market to buy a house and you want us to pull a credit report, we can. You just reach out. Now, for the first-time home buyer, you're going to want to meet with a mortgage professional before you actually go house hunting. Now, if you're looking on Zillow, Redfin, or Realtor.com, fine. You look with your eyeballs, but you're going to need to apply for a loan to see your buying power before you actually go house hunting. You're going to want to make sure that your credit and all of your accounts are current. You're going to watch your spending habits. Christmas just passed. You're going to probably want to try to chunk down those debts. Make sure that those are as low as they can be before applying, because you don't want those debts to impose on your qualifying. And one of kind of those sins of applying for a home loan and getting a home is when you apply and you're in the process of buying a house, don't go and get new debt. Don't go shopping for cars or furniture or things like that. That can all wait until afterwards. And of course, the best way is to have a mortgage professional pull your credit so you have an idea of what's on the credit report. And again, you and I, if I was your mortgage professional, I expect you to be transparent with me because I'm your advocate. I'm trying to help you. So if there's anything going on behind the scenes or something that I should know about, you should tell me. That way I'll know, and there won't be anything that sideswipes me and while we're doing this transaction. The other part of this is if you're going to get a gift, we're going to talk about that. And we need to have a proper procedure of what gift funds and how they're documented are in your file. And you're going to need to document your income for the last 30 days, but have a history for 2 years. Now there's exceptions to that if you just graduated college or your parents are co-signing, or there's multiple scenarios. But generally the lender is looking for a 2-year work history, and they're going to be verifying the last 30 days of income. So you have to be prepared to supply those documents. And again, good things for you to know. A pre-approval letter is where a mortgage lender has reviewed your documents, pulled the credit report. Most of them will submit this through automated underwriting or a human underwriter or both to make sure that that letter that we give you is just like cash, because otherwise it's not worth the piece of paper it was written on. But that will give you peace of mind. That gives the seller notification that you've gone through the process and you can actually buy this home. And you're better prepared, right? Better prepared makes better decisions, and then you're not rushing and flailing to figure out what to do. Then you can review your budget and make sure that this is the right thing for you and that you guys can afford it. So it's super important that we're making sure you're in the right mortgage to fit your needs. So some basics about mortgages. How do you know which loan's good for you? A fixed mortgage or an adjustable rate mortgage, which is the ARM? Well, a fixed mortgage is just that. It's fixed. 15 years, 30 years, or anywhere in between. And a portion of each payment covers that interest that's due, and the remainder goes towards the principal balance that you borrowed. So every time you make a payment, a portion goes to principal and a portion goes to interest, and it chunks down. So the first 10 years of that loan usually is heavy interest driven. And then as that time frame proceeds, that interest dwindles. So you're protected though. A fixed rate is great. Your payment won't go up unless your property taxes go up. You can always refinance if rates go down. Some disadvantages in most markets, the interest rates are a little higher than adjustable rate mortgage, and that means the payment's higher, right? So there's some disadvantages. Now, if we talk about an adjustable rate mortgage, they get a bad rap because back in the mortgage crash, people were selling adjustable rate mortgages that just were not the right product for the person. They can be a great program for the right person. In today's market with interest rates almost at their height that they've been in 20 years, an adjustable rate mortgage is a little lower than a fixed rate mortgage. And it might make sense for you to take an adjustable rate mortgage because when rates come down, you'll probably want to refinance like everybody else, even if you were in a fixed rate mortgage. Downside is the rates, they fluctuate, and they're only for a short period of time. They might have a low initial monthly start rate or a payment, and then that might change. So give you an example. You might have a 3-year adjustable mortgage where it's fixed for 3 years. After that 3rd year, it becomes adjustable and it adjusts to the margin and the index. That margin and the index fluctuate. So the index is going to fluctuate with the market, and the margin was set when you got your loan. So give you example, if the margin was 4 and the index was 4, that new interest rate is going to be 8%. That could be pretty expensive. So you have to weigh the pros and cons of an adjustable rate mortgage for today and for the future. But they can be a great product if it's a short-term time frame, like currently. We're expecting mortgage rates to come down. And if you have a higher rate, then you can refinance when that mortgage rate comes down and save you some money. The process. The home loan process is the same for every client. Every client goes through the same 1 through 9 steps, we'll call it. And first of all, every client gets pre-approved or pre-qualified at some point. They submit their information. they give their application, they find a property, you have a contract that's accepted. Once it's accepted, your application is kind of submitted to the lender for a final application, and then the package gets put together with all of your documents you supplied to an underwriter for a full conditional approval. During that time, your file is in escrow. The escrow officer is pulling a preliminary title report on the property, making sure there aren't any liens, getting documents from the seller, and then those documents will be put in escrow. Your loan documents, once you have loan approval, will be put into escrow as well. And then both parties will come to the closing table, not physically, but the seller will sign their portion of the documents. You will sign your portion of the documents, which includes the deed to the property and your mortgage note. Then your loan is funded and recorded with the county. Once it's recorded, that signals to the world, this is your home. So that is a special day when it records and you can get your keys, and now that is your home. And of course, at that point, seller moves out and you move in, possession takes over, and the fun begins, right? So what do you need? What documents? I call it the twos. This is a detailed list on the screen for you to look at, but I call it the twos. Most people need 2 most recent pay stubs, 2 years of W-2s, 2 years of tax returns, and 2 most recent bank statements. That's enough to get us to the pre-approval process. There'll be situations where I'm going to need other documents because every case and situation is unique. Every home loan is unique, just like you and I. So you can do nothing, right? Your options. You're an adult, you get to make choices. Option 1 is do nothing and stay a renter. You could waste your time, energy, and frustration searching for a lender online who might find you the right program, who you get a call center, maybe. You may or may not talk to them ever again. You might repeat over and over and over. If you're calling a call center in those online companies, you may not get the same person every time. You maybe spend hours figuring out how to research and fix your credit, searching for the right programs and how to get from point A to point B. And you might get frustrated because I understand it's a lot, even it's overwhelming, even with the right advocate on your side. So don't go online to figure it out yourself, because there are so many pieces to this puzzle. You need an experienced, skilled advisor on your side to help guide you through this. Then the next option would be you can call us, get you pre-approved. We'll find out what your buying power is. We'll see what incentives you might be eligible for, because some lenders don't offer down payment assistance because they don't like doing it because they don't get paid. I don't believe in that. If it's available, we're going to offer it to you regardless, because we want to make sure that you've been given all of the options to make an informed decision. And then you're going to get a mortgage and a plan designed just for you. Like I said, a home loan's unique, just like you and I. So that plan is designed just for you. So you can apply online. The links are in here and in my bio, and book a call. And I'm happy to go over all of this with you, because I think it's important that you start off on the right foot. Because I can tell you this, the clients that have started buying a home this way, and it's a fun, easy, informed, educated process, they have far better success than the ones that try to figure it out and piecemeal it all together online. Here's my contact information. You can reach me online at AundreaBeach.com. You can do an application or give me a call. I'm happy to help any way that I can. And again, going back to home ownership, if this is your first home, again, make it the best home that it can be for your situation today. It may not be your dream home, but start somewhere. And if this is a move-up home or you're relocating, again, having an advocate that's here local on your side is a benefit. So I wish you well, my friends. The best of luck to you, and I'm here for you.